Being a homeowner definitely has its advantages, and saving money on your income taxes each year just might be at the top of the list. Owning a home is a significant investment, and it's important to understand the impact it has on your income taxes. Make sure you're taking advantage of these common tax perks. Let's find out if you are. Hi, I'm Clute with Ozark Gateway Realty, and I work with lakefront sellers who are animal owners. The most common perk that you'll find on your income taxes is the mortgage interest deduction. You can deduct up to $750,000 if you're a married couple filing jointly, or $375,000 if you're single or filing separately on your mortgage interest that you pay every year. You can also deduct it on a second home, but only if you rent it out for 14 or less nights a year. So on that 15th night, it's now considered a rental property, and it would be changed how you put it on your income taxes. You can also deduct mortgage interest for a home equity line of credit and a home equity loan, but the rules are a little bit different, so you'll want to check on that. It does reduce your income. It's a deduction. It's not a tax credit, so it's not going to get you money back, but it will put you possibly in a different tax bracket, so it will still save you money. Paying property taxes or real estate taxes are also a tax benefit of owning a home in 2022. You have state or city property taxes. They are fully deductible from your income tax. Your mortgage lender may have required you to set up an escrow account, so you'll pay into that monthly, but that's not the amount that you're going to deduct. You're going to pay whatever was actually paid on the bill. So you'll have a copy of your tax bill, or you can check your escrow account and see what's actually paid out of that. That's not the insurance that you're paying, just the property taxes. Keep in mind that you received a refund. Obviously you can't get a deduction on that, so make sure that you only have on there what you actually paid. This is an itemized deduction, so you have to itemize your whole tax return. You couldn't take the standard deduction and get this credit on your income taxes. If you have to pay for points when you get your mortgage loan, you can also get a tax credit for that. You'll probably notice that there are some different charges on your statement when you go to closing, and it's common for points to be paid on a mortgage. 1 point is equal to 1% of your loan, so that's how much you're going to reduce it by. It's common for loans to have 1 to 3 points, and you can deduct all the points that you paid when buying a home. If you do end up refinancing home, you can take the rest of your points and then you start a new one when you refinance. So you can continue to take advantage of it even if you do refinance and you buy more points. Points are also limited to the first $750,000, again for married couples, $375,000 for married single or married filing separately. You also have the possibility of deducting PMI, primary mortgage insurance. If you bought your home, it's for certain years, I think it's 2017 to 2021. I'm not sure if they renewed it for 2022. So, and it also has some restrictions on income. Depends on if your adjusted gross income is less than $100,000. So it would be for the lower income earners, and that's for married couples. $100,000 is. And this is a fee charged by your lender when you put less than 20% down on a loan. So if you have an FHA, VA, RD loan, then those are going to be the type of loans that you would be paying PMI. If you have a conventional loan where you pay 20% down, then you probably don't have primary mortgage insurance. Costs associated with moving for work can also be tax benefits of owning a home in 2022. If you move to a new home for a new job, you might be able to deduct some of your moving expenses. There are certain stipulations and qualifications, like your new job has to be at least 50 miles from how far your old job was from your old home. So you have to make a significant move. It can't just be across town. The expenses need to be made within 1 year of you starting at the job, first reporting to work. You need to be full-time, and you have to be at that job for at least 40 weeks. So if you lose that job after 20 weeks, you have to go back and amend your return because you weren't eligible for that. Some of these rules and stipulations can be waived, like if there's a disability, a death in the family, if you had military commitments. So if you had to leave on active duty and were cut short on the 20 weeks, then you could still claim the tax deduction. Some of the moving expenses that you can deduct include storage, transportation, so that's going to be gas, oil, mileage, and lodging. There are also tax deductions for home improvements. If you completed some home improvements that are considered capital improvements, so improvements, not repairs or maintenance, and you took out a loan to cover those upgrades, you can deduct the interest on it, and there's no limit on how much you can deduct. They can Like ordinary repairs, drywall, painting, fixing gutters, patching the roof, like I said, those aren't going to apply. But it would, anything that contributes to increasing the value of the home, putting on a new roof, making an addition, adding a garage, those are the things that would qualify. Even if you didn't get a loan, you could also get credit if they were energy efficient home improvements. You could get those for adding insulation, a new furnace, upgrading your windows, and there's many more things that you could get for that. You'll just have to check and see what's available when the time that you go to make those home improvements. The amount you'll receive depends on the improvement and how much it costs you, of course. Personally, I wish I would have checked this out. I recently replaced my furnace in 2021, and I went with a 14 SEER just because I didn't see the reason to expend more for a 16 SEER. Well, come to find out, you need to buy a 16 SEER furnace to get the tax credit. So I wish I would have known that, and wish somebody would have told me, or I would have done the research. But I didn't, and I didn't get it, so here's your warning. Home office deductions are also tax benefits of owning a home in 2022. If you work from home and have a dedicated office space that you use exclusively for work, you may be able to deduct a portion of your home and the costs that you use to maintain that portion of your home. It does need to be your principal place of business, but it doesn't have to be the only place that you meet clients or customers. You can deduct things like rent, utilities, taxes, repairs, maintenance, internet, and more. And it doesn't need to be in your house that you own. It could be in your she shed, in your man cave, in the garage. It can be a house that you rent. So do check into that because it is a deduction that a lot of people miss out on. Selling costs can be a tax benefit of owning a home, but it's not directly. It will reduce your capital gains, and so therefore reducing the taxes that you pay if you have capital gains. You can deduct things from your profit like legal fees, commissions, inspection costs, title insurance, possibly repairs. You'll have to make sure you read the fine print. You can use your closing statement as a guideline, but there also may be some expenses you had during the listing period before closing that you can deduct as well. Capital gains exclusion is another tax benefit of owning a home. If you're married and you file joint taxes and you sell your home, you can keep up to $500,000 of your profits on the sale as long as it was your principal residence for 2 of the last 5 years. Married couples filing separately or single can keep up to $250,000 tax-free. If you weren't in the home for 2 of the last 5 years, there's still exceptions to the rule. Like if you had a divorce or a job change, you still might be able to get the exclusion. If you own the home for less than a year, then you'll have short-term capital gains. This is taxes based on your ordinary income tax rate, somewhere between 10 and 37%. If you own the home longer than a year and the other rules apply to the last 5 years and married, family, jointly, then your gains is rated at either 0, 15, or 20. Those are the only 3 choices, and that of course depends on your income. If you're buying a home for the first time, you can withdraw up to $10,000 penalty-free from your traditional IRA. This can be used to buy, build, or rebuild a first-time home. This is per individual, so if it's a couple buying a home, you each can take out $10,000 and have $20,000 to start your home journey. To be able to withdraw these funds as a first-time home buyer, you cannot have owned a home in the last 2 years. The first-time home buyer can be you, your children, your grandchildren, or your parents. Consult a tax professional to help you maximize all your tax breaks and make sure that these apply to you. How does a house affect taxes? Many ways beyond your loan purchase, even improvements, all the way to selling your property. Do you need a recommendation on a tax professional? Please reach out to me the easiest way possible for you. Email, call, or text. In the meantime, check out this video about lowering your property taxes in Arkansas. See you next time.